name is Jim Penna. I have been with VectorVest for just over 12 years now. I am the manager of retirement services and have been in the retirement service department for, I don't know how long now, 6 or 7 years, I guess. And it's been great. Prior to coming to VectorVest, I did have experience in the securities industry. I worked on a trading desk. I was a market maker for a while. And so it was a little different experience than coming to the more prudent, conservative side of retirement investing. But it's been great. I'm also, we have our Ultimate Retirement Solution courses that I'm involved in, also our option courses as well. So it's great to be here. Great to be here with these guys. And I'll just echo what Jay had written. It's more like Mo, Larry, and Curly up here than the All-Star team. So good to be here, though. Thanks for taking the time. Yeah. We'll start in the viewers page is a good way. I like that flow as well. And I'll just talk about real quick. I have 3 stocks picked. Now, let me just preface this in case there's anybody in the room who when I'm on this panel, my hot stock definition is a little bit different in that as manager of retirement services, I'm looking at those more prudent, conservative, longer term types of investments that we want to focus on. So a little bit different, but that's why I love the fact that Home Depot's up there, Lulu's up there, Allstate, because you can trade these stocks just as well. And so what you'll notice on mine, so the first one, we can start with Brown & Brown is the one that Glenn has highlighted here. And it is it's in the insurance industry. It's only $38 stock. It is, we would call it slightly overvalued. But Steve made a great point. You know, that would not summarily dismiss me from buying a stock simply because it's overvalued. Now, the first thing I would do when I look at an overvalued stock, Glenn, if you scroll over just a little bit to the right, the first thing I look at when I see an overvalued stock is the earnings growth rates. And if the earnings growth rates are strong, which anything in double digits in my opinion is, then I'm going to probably look past that. Plus, we've got a relative safety number at 1.40, which is excellent in the VectorVest program. Everything that I do in the retirement services, any course or webcast or whatever I focus on, it all starts with relative safety, the earnings, the consistency and predictability of the financial performance. That's how we define it. What 2 better adjectives to have about the stocks that live in your portfolio than consistent and predictable? So whether it's longer term, shorter term, and generally what happens with a high relative safety number is that all the other numbers will fall into place. Right? Relative value is not huge on Brown & Brown, but relative safety is very strong. The comfort index, somebody had typed in, I noticed on the chat box, comfort index is what we define as price growth persistence, or also defined as a stock's ability to withstand lengthy or severe downturns. In other words, as you saw in Lulu, as you'll see on Advanced Micro when it comes up, these high CI stocks have that lower left to upper right pattern, which is what we want to see. Oftentimes, high relative safety stocks will give us that. So that's the importance of relative safety. So that's Brown & Brown. And the other reason this one is chosen, because it comes from a very specific watch list called the DRIP 25 Plus. In our watch list, we have a dividend-paying watch list, and this comes what's also referred to as the dividend aristocrat. Not only have they paid, but they've grown their dividends every year for at least 25 years. Some on that list as much close to 100 years. But they've paid and grown their dividend, so that's the other reason from that retirement point of view that one's on there. Next is Microsoft, was the next stock that I chose. Really going on a limb here, huh, with the choice. Microsoft, I just think I was looking for a good quality stock that I think is, and not just happening now, but transforming into more, I don't want to label it as a growth stock, but it used to be that, that larger value play, but they got a lot of things going on there. Again, relative safety at 1.35. You've got the comfort index very high. Earnings growth rate is very strong. And Glenn, if we scroll over, a big part of the stocks that I choose, if you can keep going to the dividend information, all of the stocks that I'll choose do pay a dividend. And so what you also get with relative safety is strong dividend safety and dividend growth using the VectorVest analysis. So you've got double-digit dividend growth. You've got dividend safety is the one indicator. It's on a 0 to 99 scale. It's not the 0 to 2 scale that's generally talked about. So we say anything above 50 on the dividend safety level is favorable because what it's going to ensure is that your payout ratio is favorable. In other words, the company is making more money than it's paying out in dividends. You could either use earnings yield versus dividend yield, or you can see the earnings versus the dividend paid. So it's favorable when you've got that high dividend safety number. Very important when we're building, managing our retirement portfolios. And then finally, a stock, Teradyne. Teradyne is a stock I chose because part of my, what I do is we have a retirement coaching group. And every Tuesday we manage different portfolios, and Teradyne was a recent addition to one of those portfolios. And again, relative safety very strong, a comfort index at 1.7, and you'll see why when we go to the graph. And just all of those numbers that we've all been talking about just all line up. So Glenn, we can go into the graphs now and take a look, see what all that looks like. So my graph's set up a little different. I like to start, you could take volume off on mine, Glenn. And you can take the dividend, I'm sorry, the splits off rather. It's not down in the lower left there. I asked Glenn to set mine up just a little bit differently here. I start with a 5-year graph, okay? And then we'll break it down a little bit because as Jerry and Steve both showed, a longer term, you can see earnings per share, right? We like to say it's not a coincidence that earnings per share is rising, so too is the price of the stock, right? It's kind of a cliche or a well-used line that we have here. Down below earnings is the dividend payout, and this is just 5 years. As I said, Brown & Brown goes back over 25 years of growing their dividend. We like to call it the golden staircase. We used to call it, I'm using it in a little different context than we used to do it years ago on the road, but I call that now the dividend golden staircase. And so they're growing that dividend. And that's the kind of stock that we want in our retirement portfolio. So to me, it's a hot stock. But not only is it a hot stock over the long term, Glenn, if we go to 1 year, we'll see the same characteristics that we want to see on stocks that are moving to the upside. It's a buy-rated stock. It is hitting new highs, and we would probably use the same logic we were using, put a buy stop right above the top there, collect a good quality, whether it's long-term or shorter-term hold on the stock. So, and then you can even make it 3 months, and you can see a nice move on Brown & Brown as it's gone up. So that's
Brown & Brown is good all the way around.
That's
okay.
right. That's right, bro.
Wow! There you go. That's right, bro. Okay.
Oh, God.
You want to go to the next
Yeah,
stop?
let's go to the next.
Let's go to Teradyne.
We'll go to Teradyne, and you're going to see, again, something very similar. It's a 5-year graph we have set up. And again, Glenn, you can take off volume. But the same idea. This one even more so. Buy-rated stock hitting a new high, I think.
5-year high.
Today, 5-year high.
Yeah.
So again, just really the same principles here. If we break it down to 1 year, you're going to see also, a stock that's meeting not only that long-term but that shorter-term move. Now, the dividend, that's just a 1 year, so you don't see the dividend growth there. The yields here aren't great, but I always choose a stock, or usually choose a stock that does pay a dividend. So that's what we're looking on Teradyne. I wanted to choose that one and show that one because, again, this was very recently added to our model portfolio in our Tuesday coaching session. So I just thought it was a nice one. I just love that nice smooth graph pattern. And this is the one, I believe, with a comfort index at 1.7 on a 0 to 2 scale.
That's high.
So you don't have a whole lot of drawdown here.
Just look at that move.
Yeah, it's really a nice.
Most of the volatility is to the upside.
Yeah, that's right. That's what we like to see, right? We don't do a lot of shorting in our retirement portfolio, so we like to see the volatility upside. So just another example of a buy-rated stock rising in price, long-term and shorter-term if you want to go that route as well. And then finally, Glenn, I think that was all 3 of my stocks. That was it? Did I do Microsoft?
Now you are.
Wow. I could just put XYZ on all these graphs. They all really look the same here. But again, quality stock, high relative safety, high CI, earnings growth rate, dividend growth rate, dividend safety, all very strong. So whether you're trading them or investing them for the long term, those numbers are really going to be a a big deal. Again, I don't know anything about candlesticks the way these guys do. Support and resistance is what I look at. But from my perspective of that longer term outlook, this is what I look for. And we have a similar pattern. Glenn, if you go probably 3 months, you
Nice
can see,
breakout, too.
yeah, a consolidation kind of thing going there.
Yeah.
And then you've got, then you've got some strength in the stock there as well.
Right about there,
Keep
fellas?
going.
Yep.
Keep going down.
Now?
Keep going down. Keep going. Nah, Keep going. Below the lows No, there. below the low. So that connecting the other high. There Keep you going. go. Keep going. Keep Right going. there. Keep going. Right
Oh.
about there. Go to a 6
Oh,
month
stop.
chart.
Leave me alone.
Yeah, so
Yeah. No, right there. No,
There you
no,
go,
right
there you go,
There you
there
go.
you go.
All right.
So
That's better than the one that I was going to put. Okay.
That's okay.
And the beauty of this is, listen, not every stock's going to go straight up all the time. As we're watching, even high-RS stocks aren't going to do that. But what you've got is a dividend, a safe, growing dividend. They pay $2.04 a share. That's the annual dividend. So even in that August to October timeframe,
Where it's moving sideways?
yeah, you're still getting paid. Go,
And they grew
go
it.
ahead and hit dividends on that lower left, on the lower left control panel down there, right? So
Pay.
you're getting paid. Yeah, those flags
Paid.
represent one payout, the X date and then the payout date. If you go to 5 years, one last illustration there. You're getting paid on top of all this. You're getting a paycheck every 90 days. So,
That is.
hot stocks long term. So I try to combine a nice long term hot stock with even a shorter term hot stock. So the way it's related to the holiday season is buy yourself a stocking stuffer, grab a couple of these stocks, and you'll be all set.
Anybody got any input?
I'm just taken back by Microsoft, right? I
Yeah.
mean, there was a
Yeah.
time
It was
when
a $30 stock.
what's Microsoft?
Yeah, I
Now
know.
$25.
Yeah.
What does
right.
Doc call it?
It was Microsoft.
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 Yeah.
So they figured it out. They
Yeah.
they stopped making sausage and they
Yeah.
started really focusing the business model. And here you go.
Over the last few years, I mean, there's been
it's a
some
great thing.
fundamental changes in the company.
That's the
It's-
most
Yep.
beautiful chart I've seen
Yeah.
It's so beautiful.
in a while.
It's
It's
beautiful.
really nice.
But all three of his stocks are from that perspective.
Badger's saying the only thing I know about candlesticks is blowing them out on birthday cakes. There's so many candlesticks on my birthday
Oh my
cake now, I
God.
can't blow them all out, so we just put one now.
Why do I start talking Italian when I talk to you?
No, how you doing? Forget about it. So, but you look at all three of these graphs, they all have the same characteristics, which is very interesting from the standpoint of two different investors on this panel. Jerry's that more aggressive person, whereas Jim is that more steady, slow Eddie kind of guy. But these graphs are ideal, the types of stocks that you want to keep in your retirement portfolio. This is why he's the manager of retirement and bringing to the forefront these kinds of stocks. And if you're not a subscriber, or if you are a subscriber and you haven't joined the Ultimate Retirement Solutions course, this is the kind of stuff that you see. Where else are you going to be able to easily ascertain or
You're good there.
okay, these kind of this was another word I was looking for. There's another discern,
Painful.
discern these kinds of stocks out of the world of how many stocks are out there. VectorVest has the power to be able to do so, and Jim wields Thor's hammer in that universe to be able to provide this for you. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.